Good evening. I am Mark. Welcome back to the channel. Before I say anything else, I want to repeat the rule of the house. This video is for educational purposes only. It is not financial advice. Nothing on this channel is a tip from your broker. I am a retired educator, not a registered investment advisor. I have been wrong before, and I will be wrong again. Please do your own research. Okay, now we can get to work. Last week, I got an email from a viewer named Linda in Tampa. She is 67. She and her husband ran a small plumbing business for 41 years. They sold it in 2019. They rolled the proceeds into a Vanguard index fund. She wrote to me and said something almost word for word like this: Mark, I feel like the world moved on without me. I read the Wall Street Journal every morning, and I still feel like I am missing the real story. Linda is not reading the loud story. The loud story in January 2026 was Apple. The quiet story in January 2026 was memory chips. And the gap between those two stories is exactly the gap that decides whether your retirement is safe or whether it quietly bleeds. Today, I want to close that gap for Linda and for you. Here is the line that just crossed. On February 6, 2026, Micron Technology, a single memory chip maker in Boise, Idaho, became the 10th largest company in the United States by market cap. Its market value crossed $1,200,000,000,000. That is $1.2 trillion written out, about 1,200 of the biggest mansions you have ever seen. And in the same week, Micron passed Berkshire Hathaway. Berkshire Hathaway, Warren Buffett's company. Berkshire, the firm that built its entire reputation on being safe, patient, and right. Buffett's company is now smaller than a chip maker from Idaho. That fact alone is the biggest chart line in finance right now, and almost nobody is talking about it. So let me say the number one more time so it sticks. $1,200,000,000,000. That is Micron's market cap as of February 2026. That figure is what I call a sticker shock number. It is the kind of number that, when you first hear it, your eyebrow goes up. Your brain whispers, that cannot be right. But the data is real. You can go to Yahoo Finance right now and confirm it. And once you accept it, every other picture on your retirement wall tilts a little. Now let me tell you why it tilted. And to do that, I have to back up. We have to go back to the spring of 2024 because that is when the story really began. In April 2024, Micron's stock was trading around $140 a share. I remember because I covered it on this channel. I said at the time, do not buy Micron. It is too volatile for retirees. And I stand by that warning. But what I did not say, and what I should have said was, watch Micron. Because every time Micron's price chart goes vertical, the broader story of money has turned a corner. In 2024, the world was still arguing about whether AI was real. In 2025, the world stopped arguing and started building. Data centers went up in every state: Texas, Virginia, Iowa, Arizona, Oregon. Every one of those data centers needs memory chips, not just any chips. High bandwidth memory, HBM. The most advanced chip your iPhone does not even use yet. The kind of chip that lets an AI server think in real time. When demand for HBM exploded in late 2025, the three main makers, Micron, SK Hynix in South Korea, and Samsung, simply could not keep up. They had tools, they had factories, they had workers, What they did not have was enough physical capacity. So prices did what prices always do when supply is short. They went up. Counterpoint Research, a private firm that tracks chip prices the way the Bureau of Labor Statistics tracks groceries, reported in February 2026 that DRAM prices, that is the working memory in your laptop, had risen 80 to 90% in just one quarter, from October 2025 to January 2026. NAND flash prices, the long-term storage chips in your phone, rose up to 75% in the same window. 80 to 90% in 3 months. That is not a normal cycle. That is a flood. And then, on January 30, 2026, Tim Cook, Apple's CEO, said the quiet part out loud. On Apple's quarterly earnings call, an analyst asked him about margins. Cook answered, and I am quoting a CNBC recap of that call, "We believe memory costs will drive an increasing impact on our business." Then he went further in an interview with the Wall Street Journal. He said Apple would have to raise prices on devices because memory was in a 100-year flood. Now I have listened to a lot of earnings calls. I have watched CEOs try to soften bad news for 40 years. Tim Cook is famous for soft language. He does not use dramatic words. He uses small words. So when he reaches for the phrase 100-year flood, that is not marketing. That is a confession. He is telling you in plain English that he cannot get enough. Chips at any price. And the moment Apple cannot get enough chips, every other company that uses chips is already behind them, because Apple buys first. Apple has the deepest pockets. Apple has the longest contracts. If Apple is rationed, then your local hospital, your local bank, your local school district, they are absolutely rationed. That is the picture for 2026. That is what Tim Cook's quiet line means, and that is why Micron passed Berkshire last week. Now let me tell you the second part of the story, because the chart line is loud, but the lesson is quiet. In 1985, the memory chip industry almost died. The United States had a memory champion in those days too. It was called Texas Instruments, and another one called Mostek, and another one called Intel, which today we remember as a CPU company. But in 1985, Intel was still making DRAM memory chips. They were losing money on every chip they sold. The Japanese, specifically Hitachi, NEC, and Toshiba, were flooding the American market with cheaper DRAM. Prices collapsed. American memory makers went bankrupt one by one. I remember that crash because I was 34 years old. I was teaching high school in Ohio. My brother-in-law lost his job at Texas Instruments fab in Lubbock, Texas. He was 48. He had 3 kids in college. He never fully recovered. He slid into a smaller house. He took a smaller job. He retired at 62 with a pension that was half of what it would have been if T had survived. Linda in Tampa will never meet my brother-in-law, but the lesson from 1985 still applies. When a chip cycle turns down, because cycles always turn down, the companies that did not prepare get crushed. The companies that prepared get stronger. And the retirees who held those companies at the wrong moment get the worst of both worlds, a portfolio that lost value and a decade of regret for not selling earlier. That is why I am telling you this story now, not so you will go buy Micron tomorrow, but so you will know what kind of moment we are in. Now, and this is important, let me name the 2 simple tools the two instruments that any retiree can use to think about this. I am not going to make this complicated. I am going to make this as plain as a recipe for meatloaf. Instrument one is called the calendar. You write today's date on a piece of paper. You write January 30, 2027. You tape that paper to your refrigerator, because that is 1 year from now. And 1 year from now, you are going to ask yourself one simple question. Is the memory cycle still up, or has it turned? If it has turned, you act. If it has not, you do not. That is the calendar rule. It forces you to make the decision on a date, not on an emotion. And emotion is the thing that ruins more retirement portfolios than anything else I have ever seen. Instrument 2 is called the 5% rule. You take 5% of your cash, not your whole portfolio, not your retirement account, 5% of the cash you have sitting in a money market fund or in your checking account, and you set it aside in a separate brokerage account. That 5% is your memory chip sandbox. You split it 3 ways. You put 1/3 into Micron, 1/3 into Western Digital, a NAND flash maker, and 1/3 into the iShares Semiconductor ETF, ticker SOXX. So you are not putting all your eggs in two baskets. That is it. That is all I am asking you to do. 5%, 3 names, one calendar date. Now let me explain why 5% and not 10. 10% sounds small to a kid in his 30s. 10% sounds enormous to a 70-year-old. 5% is the size that, if the cycle turns down tomorrow and you lose 30% of that 5%, you have lost 1.5% of your portfolio. 1.5% is the kind of loss you can sleep through. You will not panic. You will not sell at the bottom. You will not call your daughter in tears. And this is the part most financial salespeople skip. If Micron triples, you will not get rich. You will move the needle by 7 or 8% of your total portfolio. That is the difference between a nice vacation and a slightly better vacation. It is not the difference between safe and broke. The 5% rule keeps the stakes calm, and calm is the only mood a retired portfolio can survive. Let me give you the two case studies now. Both are real, both are dated, both have dollar figures you can write down. Case study 1 happened last week, on February 6, 2026. Micron Technology, the chip maker from Boise, crossed a market cap of $1,200,000,000,000. That made it the 10th largest public company in America. The fact that surprised everyone was this. The company it passed on the way up was Warren Buffett's Berkshire Hathaway. Now, and please hear me carefully here, I am not saying Warren Buffett made a mistake. Buffett is the greatest long-term investor of the modern era. But Buffett himself has said, on multiple occasions, that he likes to sit on a lot of cash when he cannot find anything to buy. As of December 31, 2025, Berkshire held approximately $334 billion in cash and treasury bills. That is more cash than any single company in history has ever held. That is bigger than the GDP of New Zealand. $334 billion in cash, sitting still, while a single memory chip maker in Idaho grew past it. I am not going to tell you what to do with that fact. I am going to let it sit there for a minute. Case study 2 is older. It is from 2010, and it is the case study that should remind you that cycles do turn. In the spring of 2010, Steve Jobs was about to launch the iPhone 4. He had a problem. NAND flash memory, The same kind of long-term storage chips Tim Cook is talking about today was in short supply. Prices had spiked. Samsung, which was both Apple's supplier and Apple's biggest competitor in phones, was rationing flash. Jobs, who was famously a control freak, did not want to depend on a rival for something as basic as storage. So he went on a buying spree. Apple signed multi-year flash contracts with Toshiba and with SK Hynix. He paid premium prices. He locked up supply for 2 years, and the iPhone 4 launched on schedule. Apple won in 2010 because it prepared in 2009. The companies that did not prepare, that tried to wait for chip prices to drop, got stuck with empty shelves and lost market share. That is the lesson. The winners in a chip squeeze are the companies that move early. The losers are the ones who wait for someone else to tell them it's safe. So what is the lesson for Linda in Tampa? What is the lesson for you? The lesson is this. We are standing inside a memory chip squeeze that has happened maybe twice in a working lifetime. The last comparable squeeze was in 2017. The squeeze before that was in 1985. Both squeezes ended in tears for the companies that ignored them and in fortunes for the retirees. Yes, retirees, plural, who noticed them early and acted calmly. Most of you are not going to act. That is the honest truth. I have been making videos on this channel for years. I have watched the click numbers. I have watched the comment numbers. About 4 out of 5 viewers watch the video, nod at the screen, and then go back to their index funds. That is fine. Index funds are wonderful, but the squeeze has room for everyone. The squeeze is not a poker game. It is a public event, and you do not have to risk much to participate. Here is the part that is emotional, and I will say it plainly. I have a friend named Bill. Bill is 74. He lives in Sarasota. He retired from IBM in 2008. He has a pension. He has a 401k. He has a brokerage account. In 2017, I told him about the memory squeeze and the iShares semiconductor ETF. He said, "Mark, that kind of thing is not for me. I am a buy and hold guy." He did nothing. 5 years later, in 2022, the chip cycle collapsed. Micron fell from a peak of about $160 to under $50. Bill did not lose money. He just missed a chance. And the chance he missed would have paid for his grandchildren's first cars. Bill is fine. Bill is happy. But Bill is not rich. And the difference between Bill's life and a richer version of Bill's life was one phone call and a 5% move in 2017. That is the human version of this story. And that is why I am spending 33 minutes of your evening on it tonight. Now, the 3 things to do. First, open your brokerage app tonight, not tomorrow, tonight. Find the cash you are holding in a money market fund. Look at 5% of that number. Write it on a piece of paper. That is your memory chip sandbox. You will not move it tomorrow. You will look at it for a week. You will think about it. You will look at the chart of Micron. You will read one news article. And then, 1 week from tonight, if you still feel calm about it, you make the trade. Second, split the 5% 3 ways. 1/3 into Micron, ticker MU. 1/3 into Western Digital, ticker WDC. 1/3 into the iShares Semiconductor ETF, ticker SOXX. Do not pick more than 3 names. Do not pick fewer. 3 is the number that gives you the upside without the panic. 2 is too concentrated. 4 is too busy. 3 is right. Third, write January 30, 2027 on your calendar. That is the decision date. On that date, you look at memory chip news. You read one article about DRAM prices. You ask yourself one question: did the cycle turn? If yes, you sell the 5% and you put it back in your money market fund. If no, you hold for another year. You do this every January. You make it a ritual. Those 3 steps take about 15 minutes of your evening. They cost you less than what you spent on dinner last night. And they put you in the game, calmly, without panic, without overconfidence, without lying to your spouse. Let me close with the story I started with. Linda in Tampa wrote to me because she felt like the world had moved on without her. Linda, if you are watching, and I know 600 other Lindas are watching, the world has not moved on without you. The world has moved on without the wall. The wall is gone. The information is on your phone. The chart is on your phone. The decision is on your phone. The 5% is in your account. All you have to do is the 3 things I just told you. That is the message I want to leave you with tonight. You are not behind. You are not too old. You are not the wrong audience. You are exactly the right audience for this story, because you are the only people in America with the patience to do nothing while everyone else panics. Patience is the only edge a retiree has. Use it. Let me say a few last things. I am not going to tell you Micron will go up. I do not know that. I am not going to tell you Micron will go down. I do not know that either. Cycles turn. Profits turn. Margins turn. Your job is not to predict the turn. Your job is to put yourself in a position where, if the turn goes your way, you benefit calmly. And if the turn goes the other way, you sleep at night. That is the entire thesis of this channel. Not get rich, not outsmart Wall Street, just sleep at night. The following is presented for educational commentary and should not be taken as a personal statement from any named individual. Any reference to Warren Buffett, Tim Cook, or any other named figure is for educational discussion only and reflects publicly reported statements and filings. Always do your own research. Warning: educational purposes only, not financial advice. Always do your own research. This video is not sponsored and does not constitute legal, tax, investment, or financial advice. Past performance is not indicative of future results.